ASC 842 begins to list the qualitative items required to be disclosed by a lessee in paragraph 842.20.53, which states that a lessee shall disclose all of the following. First, in Part A, information about the nature of its leases, including a general description of those leases, the basis and terms and conditions on which variable lease payments are determined, the existence and terms and conditions of options to extend or terminate the lease, including a narrative disclosure about the options that are recognized as part of its right of use assets and lease liabilities, and those that are not, the existence and terms and conditions of residual value guarantees provided by the lessee, and finally, any restrictions or covenants imposed by leases. For example, those relating to dividends or incurring additional financial obligations. Now, we haven't covered subleases in this foundational ASC 842 series. I consider that more of an advanced specialty topic. But the standard also states that we need to identify any information related to subleases that is included in the disclosures we just listed as applicable. Then still in paragraph 842.20.53, Part B states that we must disclose information about leases that have not yet commenced, but that create significant rights and obligations for the lessee, including the nature of any involvement with the construction or design of the underlying asset. Remember that all initial measurement accounting to place a lease on our balance sheet occurs on the date of commencement, the date the underlying asset is made available to the lessee. So if we have signed a lease contract as of the date of the financial statements, but it's not yet commenced, ASC 842 still requires us to disclose information about the lease if it creates significant rights and obligations for us. And finally, still in paragraph 842.20.53, Part C states that we must disclose information about significant assumptions and judgments made in applying the requirements of this topic. This may include the determination of whether a contract contains a lease, the allocation of consideration in a contract between lease and non-lease components, the determination of the discount rate for the lease term, etc. As we've noted several times, applying ASC 842 requires significant judgment from management, and those judgments can have a material impact on how we account for our leases. The standard requires us to disclose the assumptions and judgments that materially affect our lease accounting under ASC 842. Now at this point you'll notice that the paragraph we just covered focuses entirely on qualitative information. We've not yet gotten to any quantitative disclosures. And it's likely it's the qualitative information that will require the most judgment as we determine what material information must be disclosed. So let's now look at how a couple of different companies approach this in their financial statements. I have pulled up the most recent 10-K for American Airlines, and we've navigated to their lease footnote, which is Note 5. The first thing we see is a general description of their leases. They lease aircraft and engines, and as of the reporting date, they had 716 leased aircraft, with lease terms ranging from less than 1 year up to 11 years. Additionally, American Airlines notes that they lease space at airports, and that those agreements include variable payments. These must not be variable payments based on an index or a rate, because they explain that these variable payments are excluded from lease payments under the standard and therefore are not recorded on the balance sheet. And finally, at the bottom of the note, they disclose information about significant leases that have been signed but have not yet commenced. Then if we scroll to the first note in their financials, the basis for presentation and summary of significant accounting policies, we won't read this entire section, but you'll see that when estimating their incremental borrowing rate, they consider their recent debt issuances as well as publicly available data for instruments with similar characteristics. So if we think about the qualitative disclosure requirements we just covered, American Airlines included a general description of their leases, noted instances where they have significant variable payments, and in their policy section provided a qualitative description of how they determine the discount rate for their leases. And they keep their disclosures relatively high level, which makes sense because all of this is subject to materiality. If we look at just one more example quickly, you'll see that Best Buy approaches this a bit differently. This is the lease footnote in their most recent 10K. And you can see that they include no qualitative information in their lease footnote at all. It's entirely quantitative, and we'll cover quantitative disclosures shortly. But if we scroll to Best Buy's summary of significant accounting policies, you'll see they include all the required qualitative disclosure here instead. So it's pretty similar. They note that their leases are primarily real estate operating leases or equipment-related finance leases. Many of their leases include both lease and non-lease components, and they elect to account for these as a single component, which is a practical expedient allowed under ASC 842. We elected to do the same at Precision Industrial. They also disclose how they estimate their incremental borrowing rate, which is based on an evaluation of their credit rating and prevailing market rates for collateralized debt in a similar economic environment with comparable payment terms and maturity dates. They note that their operating leases often include real estate taxes, CAM, and insurance, which make up the majority of their variable lease costs excluded from lease liabilities. And finally, they state that they generally do not include options to extend or terminate a lease unless it is reasonably certain the option will be exercised, which honestly is not particularly informative because they're simply stating that they apply ASC 842 as written. But again, if we look at the qualitative disclosure requirements, they've covered information similar to American Airlines. They provide a description of the nature of their leases, discuss their variable lease payments, explain how they treat options to extend or terminate, and describe how they determine the discount rate for each lease. So again, our goal when complying with the qualitative disclosure requirements in ASC 842-2053 is to convey relevant material information about our leases to users of the financial statements following the guidance in the standard. And as we saw with American Airlines and Best Buy, we don't have to make this overly difficult. Now, when looking at the lease footnotes for both companies, we also saw a preview of the quantitative disclosures required by ASC 842. In the next episode, we'll take a closer look at those requirements.